Extension of the regulatory framework to encompass the use of crypto technologies must, in my view, be grounded on the iron principle of same risk, same regulatory outcome. The starting point for regulators should be to apply the same regulation to the risks inherent in the provision of a financial service, no matter how it is provided. But differences in technology may mean that existing regulation simply doesn't work in that new context. However, implicit in our regulatory standards and in our frameworks of regulation are the levels of risk mitigation we have judged necessary. Where we cannot apply regulation in exactly the same way, we must ensure that we achieve the same level of risk mitigation. In other words, same risk, same regulatory outcome. And if and when, for certain crypto-related activities, this proves not to be possible, where we just can't find a way to mitigate and manage to the extent necessary, that's to say, to the extent we manage that risk in other parts of the financial system, we should not let those activities proceed.
Paul, just with regards to what happens to prices next, I know you also watch this really closely. Obviously, we have seen significant value being lost in the cryptocurrency space over the past few months, trillions, in fact, being wiped out. Do you think we found a flaw, and what would be the catalyst for a next move higher, in your opinion? I know we spoke about this last time you were on, but I want to check on how you see the landscape actually evolving from here.
So the past big drawdowns in the crypto space have been somewhere in the range of 75 to 90%. So we're probably somewhere near a typical bottom. But the thing to remember is that demand for crypto assets, for digital assets, for blockchain assets is ultimately driven by a use case. I think in the short run, you can pump up demand with internet memes and good press, but in the long run, it's driven by what is it that we can actually do with this technology. And so for me, the bullish signals are improving business use cases, increasing business deployment, fixing some of the sort of structural issues in the industry like better regulation, and there are a bunch of positive signals there. And the ones that I look a lot at are, so for example, the new regulatory framework in Japan is a really strong one, and it signals that more and more governments are going to be clearly regulating stablecoins, which are hugely and systematically important for decentralized finance. Secondly, the ramp up in ESG tracking technology. So more and more use cases are being ESG for example, carbon tracking, supply chain management. These are things that will drive demand for crypto assets, blockchain technology for the next decade or more. And those are all proceeding along. And in that respect, again, still feels very reminiscent of 2001, right, where asset prices may have crashed, but the value proposition and adoption kept on going.
Yeah.